Hello there. Thank you so much for tuning in to today's episode of The Business Age. You'll be with me, Naringwa Fiona Mothoni. On today's episode, we'll be talking about financial inclusion, which is more than just mere access, but empowerment. How do we make sure that each and every citizen has access to accessible, affordable, and secure financial tools? How do we bridge the gaps that are still present? We also get to understand Rwanda's progress over the years. We'll be speaking to Lucy Mbawazi, who will be taking us through this conversation. Thank you so much, Lucy, for joining us. You've had a front row seat, if I may say, in the last about 10 years or more within the financial inclusion space. You have been a champion for also digital payments. How would you say progress has been over the years?
I mean, when I think about financial inclusion and the journey Rwanda has walked, I cannot help but be proud. Where we were when I came back in 2010 and was entrusted with leading the development of the National ICT Plan, or the NICI 3 plan, and how the economy was mainly cash, 100% cash, I should say. But what I loved was the clarity of leadership of what it is we needed to do and clarity of where we needed to start. And when I look back to the journey, I think we had made great strides by 2016 in terms of financial inclusion. And by the time COVID came, it was in fact because of financial inclusion that it was not difficult for us to increase the number of digital transactions or for people to easily transition to such a difficult moment and be proactive in prevention and quickly getting rid of everything that came with the challenges of that time. So that readiness to be able to meet people with support, to be able to move us to paying digitally is what came as a result of financial inclusion. And if you look at the transaction growth during COVID time, I think transactions grew by 400 or 600%. That is because the country had done the work of really driving financial inclusion. And so we can only be proud, but there remains some work to do, and I believe we can do it. The highest business propensity in Rwanda, according to the government of Rwanda statistics, sits at the land borders. But it's also the place where the least digital inclusion and the least financial inclusion and usage is. And that's because the transaction lives of our sisters and brothers in those communities are with brothers and sisters on the other side of the border. And if they don't meet digital payment solutions there, they have to transact in cash. They have to buy cash, they have to withdraw cash, and they have to move with cash, which is very expensive. So we have work to do there. And I believe we can, especially now that we have the East African community working hard. But mainly we have the Africa Continental Free Trade Area protocol on digital trade that will allow us to solve for this. But the other component also from a banking, maybe it's even a question, from a banked population, not much has changed since maybe 2012. We are still, I believe, under 30% banked. And so I wonder when people need a mortgage, when they need a significant loan, where are they going? But maybe it's because we have community solutions. We have village savings and loan associations. We have SACCOs. We have all kinds of places that you can get. But at least I'm happy that it seems as though every household has a mobile device and therefore is digitally included and financially included, because if you have a mobile phone number, you have a wallet automatically attached to it. So we've done well. And now to get that, because I think in Pan-African, is to get that across the continent. Will be good, but I think we'll do it especially when we solve for the communities at the border.
And even before we get to what needs to be done to make cross-border payments easier, from what you have just said, looking at the momentum of the digital transactions, the increment during the COVID-19 periods, would you say it has been maintained, or how are we currently?
I think we're still doing well, but probably, you know, because when you grow by 400%, where else are you going? It's probably tapered off. The question is, I would love to see the comparison between cash in circulation and cash in the treasury. Just what is the cash in circulation? I think that is the measure of success. Or better yet, how much money is the government still printing today? Because how much we print as well is a measure of how well we're doing as well from financial inclusion. Because if we still need to print cash, why is it? Because printing cash is quite expensive. It's not cheap. In some cases, the cost of printing the note or the coin is more expensive than the value of that coin. So why are we still printing it? Why aren't we using digital coins, so to speak, which can only happen with digital payment? So there are questions. I think we can only answer them together. What does the data say? What I love, though, is the central bank just released a dashboard of what financial inclusion looks like in Rwanda today. You can see it by how many people have accounts, how many have wallets, how many are doing merchant payments, how many merchants we have, how many ATMs we have. All this is now public information. And I would love to see that dashboard across the board. But I think it's in that data that we get the answers. I would, in addition to the financial inclusion data, want to see what is the cost of cash today to government to print, and how much of it is in circulation, and what do we need to do to bring it into the treasury so that we can take our interest rates down from what they are today, which is an average, I think, of 16-17%, to single digits.
When you're looking across the society, not only Rwanda, but across the continent, cash is still king. And when you compare and ask, some may even say that cash is expensive, but also digital transactions, they also do incur cost. So how do we differentiate the cost that is being incurred, whether it's through cash transactions or digital transactions?
So I think we need to qualify what is the cost of cash. The cost of printing that cash, the cost of transporting that cash, the cost of securing that cash, insuring that cash, and the time cost, which is really never counted, and yet it's also the biggest cost, because how much time, what can you do in the time that you spend going to the bank or to the ATM or to the agent to withdraw cash? The time that is spent within that transaction, the counting of that cash, now you go to transact with it. Where are you transacting with that cash? Is there no other way? So what is truly the cost of cash? And on the other side, what's the cost of digital? Because with digital right now, I can pull out my phone, I can send you money instantly. We didn't have to go anywhere. Our time is very well spent to the things that we love to do it. With cash, you don't have that luxury. For a business owner, you need to hire a cashier. That's part of the cost. Count the cash, have a safe to keep the cash, transport it to the bank, line up to do the deposit, or at the agent. Whatever the case, there's movement. And so we need to really make sure that people count the accurate cost of cash and compare it to digital payments. With digital payments, it's a financial service. It's a financial service where a financial service provider has invested in the infrastructure, has a team managing and running the infrastructure, building the products and the services, and that has got to be compensated. But truly, what is the cost of transacting digitally? If I look at the POS, which is most popular, or online, For me, as the person paying, there is no cost to me, except when I transact outside of the country, in which case I pay just the foreign exchange cost to go from Rwandan francs to the currency of where I am. For the merchant, it costs a certain percentage, and anywhere from 0.5%, I believe, to 2.5% is where the market is, or less, right? When we started the cashless journey, it was 5% on the market, which is crazy. But some markets have that. Now it is much less. And for smart financial service providers, the more your volumes grow, the less you have to pay. So if you're paying anywhere, let's say 2.5% per transaction, there are those who are, it's price sensitive, because if your profit margins are small, you want to maximize as many. But again, if they compare to the cost of what it was to them when they have to carry cash, count cash, secure cash, hire someone to count the cash, what is that cost? So having that understanding is important. But what I've noticed when you visit when we go out to speak to business owners, and we did this at the border, where they tell you how difficult it is for them and why they don't want to transact in cash. They would love for it to be digital, but they have MTN mobile money here, just as an example, and there is MTN mobile money just across in Katuna, right? Same name even. But to buy those pineapples and bring them back costs. If they pay digitally, it's a remittance, because merchant payments are not interoperable, meaning I should be able to pay the Momo code of the pineapple seller on the other side without any hassle. Today, that is not working. We need to solve for it. And when we solve for it, I'm sure you don't need to convince MTN or to convince the trader to go digital, because it is very easy. In fact, many of them say, if I could pay digitally, I don't even have to leave my market stall or my shop. I can send my son to go over and pick things, and I just send the money, because we've known these traders for so long. It's the same community. Time will be saved, but another job opportunity will be created as a result of that digital. First, from the application that she's ordering the pineapples and making the payment. Second is the bicycle that will go and pick up those pineapples and bring them back. So two opportunities created from that digital transactions. And I think that is the opportunity. Beyond the payment, to cross the border, it takes anywhere from 5 minutes, but even 2 hours, depending on the line. So for the traders on a market day, every minute counts, because every minute is a customer that you could be missing. So when we digitalize the payment, the trader does not need to travel. When we digitalize the payment, we can also digitalize the border process to where they can maybe put their thumbprint or their iris or something that allows them to move within minutes, to not spend an hour or two of a market day standing in line to cross. And that's the responsibility of government to do. Government solves the pain points at the border. Government solves the pain points of payments. The moment they are solved, investment flows to go get the community digitalized, to give them the affordable devices, the affordable connectivity. But in addition is data that can inspire innovation beyond payments and beyond everything else. And for me, I think it's time to shift the conversation to not, I think maybe we even need to change the language from financial inclusion to digital and financial transformation, because it has to be about transforming lives. 80% of our country, and I think on this continent, lives in rural areas. And we shouldn't have to leave rural areas if that's where we want to live. It's the responsibility of government to ensure development reaches the rural areas. The easiest development to reach is digital and financial services, because once the policy is right, investment will go there and do, because there are millions living in border towns. For Rwanda, there are tens of thousands that are living in border towns. So what are those things that are remaining to do for us to solve that, to where the experience of that trader is the same as it is when I need to pay for your services? I just Momo you and life is good. Can we do that as well for them, for the places where they buy goods, and for how their customers pay for their goods? And from that data, this is where what financial inclusion really is. They can access savings. They can save easily because they don't need to keep money under the mattress, because there'll be an interest rate they can get with the saving in a financial institution. They can get insurance on a rainy day. If another pandemic comes, you don't have to shut down because you insured your future. So that's a protective service that you can get. God forbid there is a calamity and you find yourself in a vulnerable situation, government can meet you there because you have a financial tool, you're verified already, and support will arrive where you are, whether you're within your borders or outside. Government can reach you and allow you to stand on your feet and come back. So these are the opportunities that come, and that is really what financial inclusion is and what we need to be doing. I think we should go out of business of talking about financial inclusion. We should aim to go out of that business by 2030 or sooner, by really just solving that which is preventing us from being at 100% financial inclusion. And for the continent, I think, but the average banked population is about 39%. The average access to insurance is about 3%. That means we have a lot of work to do for financial inclusion. The average cost of credit is 14 to 20%. Why can't it be under? In Cape Verde, because they are very much a digital economy, the cost of getting credit is 7%. Why can't it be the same for all of Africa? That means financial inclusion is not where it needs to be. And digital payments, of course, are the easiest and lowest hanging fruit to get everyone in, build the trust, because payment is what we do and it's what builds trust. If I send you money and you get it, you can release your goods or services. If you don't, and so let's democratize financial services by making them equitably accessible and used to be able to get to where we need to be. And I know we can do it.
We can do it. But when you're saying this, so many things were running on my mind. One is I was following up on the story of what's happening in Ethiopia with Safaricom, Ethio Telecom, and how Safaricom is pushing for the government to create a conducive environment for it to thrive, because with the dominance of Ethio Telecom, it's putting in place tariffs. But now, in place of government, what do governments need to do, especially when you're looking at cross-border? This is a conversation that we've had constantly. When you're looking at red tapes, when you're looking at the limits still that are there, what can be done?
Well, the governments have started to do it. When they signed in this very building the Africa Continental Free Trade Area Agreement in, I think it was 2018, they decided to work together to remove those barriers. And since 2021, the Africa Continental Free Trade Area Secretariat has been working to remove those barriers. From a digital and financial inclusion perspective, the governments have adopted, the heads of state on February 16th, and I had the joy of being in the room after being part of the process of writing the protocol on digital trade. My twins are called the digital trade twins because we were together from the beginning. The adoption of the protocol and the annexes of that protocol that include digital payments, digital identities, cross-border data sharing, which are the crux of digital public infrastructure to remove these barriers. Now it's implementation. So the decision from a political will perspective, we are there. That political will needs to turn into real action with people real quickly. And we can do that. So working with the Secretariat of the AFCFTA, and in my current role as the Global Director for the Better Than Cash Alliance hosted by UNDP, is to activate those words and obligations into practice. And it's such a privilege to take what I learned in Rwanda and the journey that I saw, to see that it's possible for it to happen for the continent is probably my proudest work after my kids. But I believe to get it done, we are going to need to show in practice, find traders, understand what their pain points are. We already know them, fix those issues, ensure that they're happy with these digital services and they trust them, and they're working to solve their problems. And once we do that and learn from it, then it should be easy for us to scale. If we could, during COVID, meet that difficult moment with digital solutions, we don't have to wait for another difficult moment, especially that comes as a result of anything, to really get the financial services that people need into their hands. And to be at the AI Summit, AI can help us get there very quickly. If you look at the border crossings, AI can solve that problem very quickly. We have brilliant Africans to build these solutions. The solutions are probably already here. It is that we harmonize the standards of this one market. We test those out, but we test them from the perspective of the trader. We learn from doing, and then we scale. So I think the big hurdle of getting countries to agree is done. Now it is for us to, if I can borrow from this country's famous words, imvugo niyo njiro, that is what we need to do, is we need to turn words into action and do it very quickly with those who are most pained today by the limitations of that are posed by financial and digital exclusion, and do it very quickly. It will take government sitting with their most important stakeholders, the citizens and the private sector, to solution these things. Government does their part, the private sector does its part, and the citizen does their part. And we really move this together, and I know we can do it.
And earlier you said there's also the need to move the conversation from saying the regulation policymakers to actually just bringing it to the person, you know, so giving them the solutions in their hands. How does that look like? Is it the involvement of the private sector? Is it also looking at the product offerings that the financial institutions have and bringing on board innovation? How does that look like?
For me, it's all about choice. The Better Than Cash Alliance has the UN Principles for Responsible Digital Payments, and what that means, responsible simply means, and I think you've heard it a lot during the summit about responsible AI, means that it serves everyone. It leaves no one behind. And I think we're going to need to just get on the ground and do what is required. For the example that I gave for the traders that we visited, now we just need to sit, in fact we've already done it. The solution providers will tell you it will take us 30 minutes to switch on mobile cross-border merchant payments. Just let the central bank allow us to do it, and that's what we need to do. So I think at this point we can get any of these things done in the next month or 6 months in a pilot. And then from that we take it at scale. That is as easy as what we're doing here. Sit, talk. What's the solution? And tomorrow we go do it. We test it out with the community. The community says yeah or nay. With the community, we make sure that the solutions that are reaching them are responsible. They're not gouging them. They're not cheating them. They're transparent in a language they understand. That they have choice. They shouldn't be limited to one or two. And so we have the responsibility of sharing these principles with everyone that provides financial services. And they go and compete for the customer, convince the customer why their solutions are the best, ensure that they live up to what they have promised, which is what responsible is. And then the market will do its magic. So I think it's that simple. I don't understand why it's difficult to do, but I think, I know we are going to do it, because with everything you lead the change you want to see. So my task is to work with my colleagues to lead the change that needs to happen. We will get on the ground. We will engage. We will not leave the communities that we choose to work with or that are selected to work with until the job is done, that they're happy and they can talk, and it's them talking about how happy they are versus me telling their story. And in business, and I did work in a bank, word of mouth is the most powerful marketing tool. And so I think when we do the right things will bring the customers on board, because other customers will be telling everyone else what is working for them, and then business will come and profit will flow. And with financial inclusion comes financial freedom. We owe it to our citizens to ensure that the environment is one that enables us to achieve financial freedom, and that everyone has a right to an account in their name, that when they leave their country to go work somewhere else, they're still protected. Their resources are coming back home, and they're not enslaved in someone's home because they went chasing money and they were promised money, and then they come back tortured in every way just because they were disempowered. How do we ensure Africans leave the continent financially empowered for their resources to come into, and to stand on their dignity wherever they are, and to leave difficult situations because they're empowered? Those are done by government. Whatever barriers are there, it is the responsibility of the government, of the people, to be truly for the people and solve these problems. And it is partners like us, it is the fourth estate like you, it is every single one of us that has a voice, that has a seat at a table to do the right thing and do the bidding for all 1.4 billion Africans to have the right to the right financial services for them to build, grow and thrive.
You've touched on the 1.4 billion, and I'm just looking at the market. If we unlock that, if the AfCFTA actually becomes a success, which it will be a success, how much are we unlocking as a continent?
Mr. Masiyiwa talked about, when he was asked, about the potential of AI, and he said, we just don't know. When I think about activating earning opportunities through financial inclusion of financial services for 1.4 billion people, I frankly don't know what is in store for us, but I know it will be good because we have seen it somewhere else. We have seen what financial inclusion for all does. We have seen what digital inclusion for all does. We see it in Africa. Economies like Cape Verde are not by mistake. It is intentional designing of solutions that work for the people. When you go into the market in Cape Verde, it's the same experience that you will have in a hotel. There are points of sale for you to make payments. I'm sure they're building mobile payments now that I've not been there in a while. But the same benefits that others enjoy, we can enjoy too.
There you have it. We've had a conversation on financial inclusion and what it really takes to bridge the financial inclusion divide here in Rwanda, but also across the African continent. We've touched on the challenges, the opportunities, but also a future where we can have an economy where everyone is empowered and everyone can thrive. You are with me, Naringwa Fianamothoni. Thank you so much for tuning in.